Hi, and welcome to the Mashele Money Podcast. On this very episode, we discuss understanding the financial markets, securities, instruments, and assets. To help us break this conversation, we host Larona Kwapa, who is a 25-year-old serial entrepreneur invested in different businesses and also a retail financial markets trader. Academically, he holds a BA honors degree in film and television production from Limpopo University. He's also the founder of Kgothala Motswana Wetsho, a platform designed to inform, motivate, and empower Botswana. It's currently sitting at 125,000 followers on Facebook. Check out episode.
Thank you and welcome to Mashele Money Podcast. Today we give you a conversation around financial markets. Mr. Larona Kwapa, where is a self-taught trader, also a serial entrepreneur. So this topic it's of great interest to Botswana, more especially banana. So stay tuned. Mr. Kwapa, thank you so much for joining us, Mashele. Yes. So when I like your profile is quite lengthy even though you are young. So just tell our viewers
Okay. Like you are Larona Kwapa. Ke tswa ko Mochudi, ke goletse teng, ke tsene sekolo teng. From standard 1 until 7. Okay, from standard 1 until standard 7, and then I did my secondary thing until I get out to Form 5. And then I went to Limpopo to study digital film and television production. But that is when I had a passion in entrepreneurship. So I had a challenge of balance of school only entrepreneurship, but I cannot get it to until it's the journey sharp like it's all graduate.
Yes. So you I remember at some time government even said our student was involved in entrepreneurship, but it might be maybe a bit difficult for one to balance. So when I know khona
no welding a lot of that because Aish, to take what like smaller business. Apple school, go about military. Lori, go along school, go focus at the most to do one.
Yes.
We had to business, so it was very difficult. But hella making a economic manager. Like it's okay, I learn school, I school, I do the business thing.
Yes. And then how did a business? What was the main drive? I mean, was it money or it was just passion of changing how things are?
Yeah, it was not about money. It was all about the passion. Look, one or a problem again. Solve. So yeah, that is what driven me because my family, it was about consumers.
Yes.
Consumers, not about business.
Yes.
So, but was not about business.
Yes.
But happen to but warna matata amadi.
Yes.
So, as an entrepreneur, it's all about level or problem we solve.
Yeah.
So yeah, that is how I started. Because I was using my resources thinking what can I do?
Yes. Yeah. Yes. And then what are some of the businesses that you did while you were still at school?
Some of the businesses nearly to registered companies when I was school, I was smaller. We were registered and another thing I understand go school we're using the software, Photoshop over those Prima Pro.
Yes.
So I was using those two to make an extra cash, maybe a problem. When I was school and about Panago editor who the assignment so that is where I started beginning about the software and making a bit of money.
Yeah. Dikolo universities more especially, they've always been a big market, and ke market e leng gore gantsi o thela re sa o lemoga gore motona go le kae. I remember nna ke tsena go UB, hey, you know, ne le traffic yela everywhere wa bona, but ne re na re hapana le traffic ya teng la re tswa mo go yone re se moganye ya gore but how can we make money from this traffic? And then we spend most of the time re tshonne re sena madi waiting for month end. A month end that's na hala when say hit account paloko robala ga re emelle ile o simolla go spenda. You know, we did that all the time until we graduated, and then later on how setse re bereka ya no ke gona re lemogang gore my pelo itse re keng go I think we missed out on a huge market, right? And then you go out there, yes, out there there's still a market, but the best market was actually while we were still at school. So I get sorry, when during your time, can you share maybe gore ono khona go dira bo bokae hela just by doing those businesses in a month?
Atota gore no go depend mo gore you know for business in Nzanka, but kana the time at school allowance was around 1.6.
Yeah,
but no school gore we are using a lot of equipment so that's an accident. But there are some in a corner one school kilometer so in a month 7 point something, which was something, and you have to take the money and reinvest into something else. Because is more of practical work. So whenever school
yes.
So we are putting a lot of effort more learning the skills and software and everything. So
that's powerful. That's a lot of money actually. You know, a lot of people don't make that much as full-time entrepreneurs, you know. So now speaking about reinvesting the money, you've set up a page on Facebook where you teach ruta batho ka dikgang tsa go invest in different platforms, but what I like more especially about your teachings ke gore you speak more about people getting to understand the type of investments that they're getting into, because mongwe le mongwe batla go dira madi, but you know, very few people are willing to learn. That's why a lot of fraud, a lot of scammers coming in, because they know what everyone wants to make money. So if you come to someone I can actually help you double your money. You know, I think you sound excited on some idea, right? So you've created a platform where you teach people about ways to use money. Where did that inspiration come from?
Well, I guess in my first year, that was in 2016. I read one of the book by Robert Kiyosaki, Rich Dad Poor Dad. Yeah. So that book, you know, opened my mind and inspired me. Can't be but your neighbor the other way.
Yes.
So from that book, I kept on reading more books. You know, your Richest Man in Babylon. First Lane. So this book inspired me to see the world in a different way. You know, so a lot of time out of ignorance, knowledge. So that is where the inspiration comes from. Or if I'm inspired and I have this knowledge, I can use this knowledge to impact others and help Baba. Because these books, a lot of people are very bad, but they are so powerful. And nearly everything that you can learn about life. So that is where the inspiration came from. And then I started more Facebook and to try to encourage people, you know, they should learn things. They should know what if you want to do something, knowledge comes first. That is where the inspiration came from.
That is powerful. That is powerful, and more especially in financial services. There's very little, you know, knowledge among our people. And at the same time, there are so many opportunities of making, more especially if you are not you know, for Chaba to enterprise. So the markets can be something that is quite lucrative because we are literate, most of us, as far as school is concerned, reading and understanding or being teachable, right? So so now mudi asset class in thing, or rather the financial markets, I guess it's a longer thing. Re simolole go ruta gore sente ke eng se batho ba tshwantseng go se itse gore motho a itse gore gona lemo o ska ta utsidiwa ke motho ela gore a re ke go tradela mo go bokete o sentse gore nna ba sa boipotsa gore mapele le gore mo why o go dira go bokete because wena o tlhaloganya gore go nne ka
yeah. I think the first thing that people should understand is there's a confusion in the financial markets. Because this thing I think
yes,
the financial market. But people should understand when we talk about the financial markets and forex, the crypto, what or exactly
yes.
So when we talk about the financial market, we are talking about a market where financial securities are bought and sold. So the market is a global market, and you connect it through the electronical ways.
Yes.
So what I want to tell so anti-core bazona baitika more the stock market.
Yes.
Your stock exchange, Johannesburg Stock Exchange, Nasdaq Stock Exchange. But it's about the forex. So these financial markets got their sort of branches within them.
Yes.
Not only the stock market, we have the crypto market, we have the commodity market, we have the synthetic market. So this market targeting has a forex but they were forex
yes.
So but forex we are talking about the currency market.
Yes.
Your GBP, USD,
yes,
GBP, JPY, Randa, and everything.
Yes.
That's where we actually talk about the forex market.
Yes.
So, but when I go to forex market, we are talking about somebody say,
yes,
like, forex is the sort of a branch in the financial market. We have the crypto market, we have the commodity market, we have the synthetic market, and all these things. Some things is a business as a gamble. Because but wait, this thing gamble is a serious business. But what's I will gamble in this thing.
But ke kupele wa bonya wa je maybe to clarify forex because ke ene le ngore batho ba rata thata. This is not new. It has always been there. Bomme ba culture as is zuru ke batho ba ilongore ba tswa khakala ba dira forex ga o ya go bus ranking kwa o bathola o ithele gore no go betsa forex le serious whole day. And I think batho ba bangwe gongwe ne re ha ba bona ba nna ba tswa change madi ne ba akanya gore ke gore hela ba go thuse gongwe bona ba bata di ranta bona ba bata dipula wa bona. But it's a big market. It's a very, very profitable market. It will not stop making money as long as we are using different currencies. Right? Gongwe ka ema na go eleng gore now we'll be using one currency across the world, but now we still need dollar, you need kwacha, you need rent, you need, so it has always been there. What has changed to allow everyone now to be able to participate in this market?
Well, korba to tsunzu tlhaloganya gore gone gore a kere kore ha o tswa mo Botswana wa go South Africa o change currency.
Yes. Yes. Yes.
What have changed gore now we are doing this electronically. So we have a platform called MetaTrader 4 and MetaTrader 5. So these are the platforms, we are using them to trade currencies.
Yes.
So what we are actually trading, or we are not physically trading it, but we are doing it electronically. But they are the same dollars and everything. So these things, as they move in the market, on the chart and everything. Supply demand but they don't really understand so as traders, what we do, we look at this chart, but there are electronical. We don't actually physically hold the money with trader forex. No, but in this case, we are using this that platform or really electronical or Pula imogo $1 equals 12 pula hormone. But at Libilana in the next coming 2 weeks, so if you go long or maybe I got losing money. But if you predict well or and then you buy at a certain price,
yes,
that is how you make money.
Yes. Yes.
In the stock market, I get the shares is a company, and they appreciate. That is how you make money.
Yes.
This company, the shares that they depreciate or that is how you lose money.
Yes.
But you can hold until the price appreciate and make profit.
Yes.
Similarly to forex trading.
Yes.
That is how we make money and that is how we lose money. This is not a gamble.
Yeah.
You need a lot of information or predict the well but at the same time, they are risk associated.
Yes.
That is what people don't understand. So people they say this thing is gambling because you don't know what will happen next. No, it's not gambling. As much as in any business, you can't predict you might wake up tomorrow and tell you are not in business. But you must always prepare for the risk.
Yeah.
What if this go wrong?
Yes.
That's why in trading we have what we call a stop loss. We have what we call take profit. We have what we call a lot size. See, a lot size is where you determine what at this amount. That is where a lot of people they lose money and blow account.
Yes. I could tell us the three things that you just mentioned. You spoke about lot size, I get. You've also spoken about stop loss. What was the thing?
Take profit.
Okay. Take profit. Yes. So I go di thalose ka boripana gore di rai.
Okay. That's similar like a stop loss. Like we have stop loss.
Yes.
That is where your losses in that. So let's say maybe you are buying a certain currency. Let's say a currency pair. I get these are pairs now. USD, JPY.
Yes.
United States dollar against the Japanese yen.
Yes.
So it's a currency pair. They make up a currency pair. So let's say maybe for argument's sake, let's say maybe $1 is equals to maybe let's say 20 Japanese yen.
Yes.
What is the current exchange rate?
Yes.
So let's say maybe you are buying at that level. Or okay, this currency pair it will appreciate. You see? So when you place your order, you must have what we call a stop loss. A stop loss is the way you say, in case this currency pair does not go on my way. I should stop my losses at this level. So it means when it hit the stop loss, that is where now trader out of the market.
Yes.
Yes. So if you don't use a stop loss and then 3 day bids against you, well, it can go until you blow your account. Because I want to at least market and then my losses will be there. The risk I'm willing to risk this money. That is a stop loss. I don't know if you understand.
Yes. No, I think I get it. Maybe one way to try and clarify something in the real estate market, right? We don't really have control because it's not in the systems, right? You don't really control the stop loss. You can't say because I have this house, if the market goes below this much, you don't have control over those things, right? But because if you look at the situation like Pikwe, where the mine shuts down and then people's properties, they move from a market value of 2 million, now they're sitting on 600,000. You have lost a lot of equity on that property for that period. Now what you are saying, with a stop loss in the financial market, you can actually say, look, I'm putting in initial capital of say 100,000, right? A rate it's $1 for 10 pullers. I get. If we go to $1, 15 pullers, ke batla go tswa mo marketing. I get. Yes. So yes, so I'll kgathaletse gore a o go diragetse o robetse kana yang automatically because you've set it. So you actually do have control over how much you can lose.
Yes.
That's basically it.
You have control of how much you can lose, but you don't have control of the market.
Yes.
You have control over the market. You just have control over I can lose this much.
Yes.
When it comes to take profit, so take profit is when you say, I want to gain this much. Or when the market goes to a certain level, or maybe let's say I went long, but when it's at a certain level, that is where I want to take my profit and go off the market. So immediately when the price reaches that level, you are taking your profit.
You are comfortable with the profit. You don't care whether it will continue shooting up, because your fear is that it might get there and then start going down the slope. So you are comfortable at that level.
But happy, since we don't have the market, it's every time the market will reach your take profit.
Yes.
And then it go down.
Yes.
Position, or you end up losing. It can go hit the take profit and then it goes down. Stop loss.
So much as you can have all of these limits set, there is still manual intervention that is required for you to say, okay, no, make it close. Yes.
So that is what people don't understand. So in the market, you don't have control over the market.
Yes.
But we have control over it. Position.
Yes.
Maybe I want to trade for 2 weeks, or in 2 weeks you will reach there. Can just open your position and then the market goes. So the market is always moving. Always moving. When you can control the stop loss, can control your take profit. Yes. At the same time, there is a stop loss, you take profit. You can just open and close manually. I don't know if this makes sense.
Yes. Okay. I want us to go for a quick commercial break, and then Haraboa re touch on the third one that you mentioned, and then abartsana modi other financial assets, I guess. So we are taking a quick commercial break. Mr. Kwapa, we are talking about financial markets. Stay tuned.
Hi, I have a free gift for you. If you want to claim this gift, go to www.marshalling.online/gift. In this gift, you will learn how to become financially free in 5 years or less.
And we are back. If you are just joining us now, Mr. Kwapa, we are discussing financial market. So, trader, what trading really means, what forex means, the difference between forex and cryptocurrencies, jalo jalo. Mr. Kwapa, before we went for the break, the stop loss, the take profit, or these are things that are well within our control. Kana hanil go ra gambola nkabe ono sna control over how much you can lose or where you have ro gain but I just wanted to ask you this, because now I'm coming from a counseling point of view, and every time when we speak to clients, we are always, on about the education that is required to get people to a certain point. And then I'm thinking about a lot of people who trade. By longore, ha ke sentse ke bereka ko bankeng ne re ha e le gore wa go bereka mo dealing room o trader. You went through school, you had to get a certain certificate, and the certificate will teach you so many things, from what investment banking really is, what forex is, the different types of markets. I get also the emotion is that line to who can invest what in what, because how about go tsaya madi a mongwe le mongwe. I get batho ba ba tsenya madi, and then ka moso ha di sa tsama sente motho a teng wa ta a ba re letsietsa batho. So it's very important to be selective on the type of clients that you get, and you get them looking at the education that they have. Do they understand what they're doing, right? Because I and a lot of people, because they're desperate to make more profit, to take profit, they will not keep it. And then it drops significantly, and then they end up losing all of their money. So the two, this the third one that you mentioned, which is very important also. There's take profit. The lot size. Yes.
The lot size is the amount of volume that you want to buy at. For example, let's say maybe we over stock or something. I grow so that is basically the lot size. Lot size you are determining the volume so lot size say when you use the lot size, when you have your equity that we have. So lot size, that is where a lot of people they make mistake, and a lot of people they blow account. Because we kill a lot of account 1,000. About a lot size maybe a 5.0. We kill he's risking all the 1,000. So if the trade goes against him or her, the whole 1,000 blow. But if you can maybe use a lot size as 0.001, only account 1,000, you tell maybe you are risking around 100 or 10% of your equity. That is where the lot size is low. So the more you put the lot size, the more you increase the risk. So you can make a lot of money. A lot size are really good. But if things go wrong, it means you blow your whole account.
In simple terms, I think I have a general idea, but because I trade, it might not be as practical as you are thinking about it, I guess. So just for our viewers also to get a clear understanding, or okay, so let's give a simple example. Somebody has 1,000 pula, I guess. O ilongoro o batla go motsenya initial capital to start trading, I guess. So now harere lot size ke batla we ntsele from that point, I guess. Somebody comes o tsenya 1,000 pula simola go trade on la account e trader. So how re o choose a lot size ke batla re nthalose from that point there is a 1,000 pool.
Okay, let's say maybe ke na le 1,000 ke batla go simola go trade.
Yes.
Get depositor on my broker.
Yes.
So let that 1,000. I get that is your investment.
Yes.
So as you trade, or reka tsone bo euro USD and all these currency pairs or whatever you'll be trading, gold or whatever. So you are determining how much do you want to trade. Kind of gold ele bokete bokae le bile equity ya gago. So o mongwe ka rana le 1000 dollar okay nyane ke batla go reka gold le pedi hela ke dirisa 100 pula. So that is 100 to risk. Or if the trade goes wrong, you lose your
100 pula on the gold. Yes.
Yes, it's the lot size. When you say 0.001,
yes,
the lot size.
Yes.
And then omunguna 1000. About in your lot size say maybe 10.0. Oral anywhere is risky much. So oral ha akele lot size in zano. Onga no risk 900. Oral if things go wrong, sala 100 will blue 900. The lot size. So lot size you need to determine what rekabo kit the more you increase the lot size, the more you risk much. The lower lost stage in oral risk a lo nya.
A go mpolela ha ore o batla go reka bokete bo le kae ora o reka bokete bo le kae against maybe a certain exchange. So okay that ke heskai go o ta inthalosetsa gone ho. So say o batla go trade USD Japanese yen.
USD JPY.
Ager. Abore you have 1000 investment, so ukare okay no 100 pula out of the 1000 will trade that. 50 pula out of the 1000 will do a different currency. That is what you are talking about.
That is what I'm talking about. So that is where the lot size comes in. No, I just want to risk because I think you have to calculate. You have to calculate your risk.
Yes.
The spread, the pips. So I level this kind of too technical. So on your platform I get risk. So I level okay. If my stop loss is here, I'm using this lot size. The risk in Bokana. So that is where the lot size you need to worry. The more corporate to go a certain currency pair. Your risk. You have to determine. That's why it's very important. And people, all this process, but I was going to calculate to a level of spread is in PPD guy. Blow account. Because people don't have the right information. To calculate the risk.
Yes.
In business, go out of real estate. Go banking at 20 million or go the apartment. You have to calculate the risk. We run on the tenant in Pabukan, but people don't do it. You can't just go to a bank or my yellow.
Yes.
Business.
Yes.
So you have to calculate everything.
So ako Rian, the reason why I'm asking you potso e thatai on the lot size, I want to find a simpler term to use, right? Right? So would this be similar to saying investment diversification?
Yeah.
Right?
Yeah.
Hari bua ka yone lot size. Obviously yes, in financial market we have different language, right? But for dira gore batho ba tlhaloganye, this would be similar to saying, look, setseng sengwe le sengwe on one platform because or one investment class, because go kanna ya ganna le go kanna le mathata mo yona o ka ska dira send gore wa go lose bontsi thata agere maybe gongwe we spread a bit agere a certain percentage ya go bokete, a certain percentage ya go bokete. Similarly hela ka gongwe ha advisor motho are I'm highly invested in the stock market, me why o tsenga sengwe le sengwe in the stock stock market? Why don't you do maybe 40% or 60% if you really like the stock market, and then 40% in fixed assets somewhere there, real estate, a bit of that with highly, so that if things are not going well, the side can. So even though it's not a similar thing, but is it the same thinking? How level a lot size?
Well, the lot size you can. It's not like you can just trade one thing. Of course, yes, you can say, okay, I'm trading the GBP, GPY, but I will risk this. There's a lot size. But at the same time, you can trade another currency pair or trade the CFDs or anything. Or you can trade GBP, GPY, or risk a certain percentage, or trade the Nasdaq or risk a certain percentage. I don't know if
Yes. No, I think I get it. I think basically, Ella, it can be understood as learning diversification, because when you diversify, you have to study what you are risking. I worry, okay, I think the risk here is very high. I'm not willing to lose most of my investment here. I will allocate this percentage, and then I be allocate them that way. And when you do that, and following your advice also, when you do that, it's not very appealing to a lot of people who want to trade, because normally when you diversify like that, you don't make big monies, right? You do make money, but it comes you can manage you can manage slowly growing. So my thinking is it might be that batho ba ileng gore gonga ga ba di realo. It might be because one, obviously they are not well informed. Two, they don't find the need to inform themselves, because they have convinced themselves or they have to go big. Go big or go home. All right. No, wonderful. I think we can, in the interest of time, we can quickly move to maybe explaining the line it's synthetic indices yalo what are the main differences between all of this and also cryptocurrencies?
I think you believe in that synthetic, that is why a lot of Botswana got the so we have been talking about the currencies.
Yes.
Different market. So the synthetic indices, it's sort of good more broker.
Yes.
Broker sort of we did some market and this one they are sort of they are centralized by the broker. It's called deriv. So this broker it relates on the synthetic. That is where people
derivatives.
Sort of. Yes. So the difference they are not affected by fundamentals or your Fed, your anything to do with fundamentals.
Yes.
Purely technicals.
Yes.
And these ones they are from the broker. I don't know if you get the difference.
I think so. The broker is to go in between the product owner and the client. Yes. So what the broker would do, broker would develop their own platform. Yes. Now people will be coming in. So but the broker should be affected by fundamentals.
No, it's not. This one scoring it's a broker. Normally the broker they connect you to the liquidity market.
Yes.
But this one the broker only there's sort of the two markets. Only connect to the liquidity, you add currency and Nasdaq and everything but gold. You connect to the liquidity. But
yes.
the mini market, when not synthetic, here the broker will develop their own thing. Their own market. So it means the broker cannot control and they have everything, they have power of over client. Yes. So here they develop their own mini market. That's what they do synthetic. Sort of they generated their own thing. So here there are no fundamentals they affect this market. No, it's purely on technicals, no fundamentals, no anything. It's compared to the currencies and commodity market.
Yes.
If maybe there's interest rate, the market.
The Feds change the rates, market moves. Yeah.
But there, no, it's purely on technicals.
Yeah.
No fundamentals, no anything.
Yeah.
Wow. So that's the difference. And some of examples of this synthetic is boom and crash, volatility 75, stop index, and all those things.
Yes.
So here is purely in the broker. So
Yes.
the broker develop his own thing.
Yes.
Go passing into the market.
Yes.
Yes.
Ke so re bila ho re yalo ke gola ke gona batho ba tetseng teng gone because gonna gonna go buiwa bo boom and crash corner to corner a go e thalose yone boom and crash or ke instant
the boom and crash is sort of an asset class. So boom and crash, like they say, it's boom. So when I go in this spike, so if it booms over, it goes up. So it's a booming market. Something.
Yes.
Booming market. So when it crashes, orally it spikes. It spike.
Yes.
The boom, the crash and so yeah, that is the type of things the broker will develop.
Yes,
we also have more volatility 75, stop index and everything.
Hey, can I ask you the mic closing on to you?
Yes. Okay. So this ones are run by the broker, and these brokers, most of them they are overseas, right?
Yes.
Yeah.
They're overseas.
And then there has been a lot of talk locally around regulating the virtual assets. Yeah. And go bua thata ka brokerage, and locally we don't have brokers who own any platform. So I think there's only Yellow Card who are basically doing an exchange type of platform. So and then we have the crypto market. So do some of these brokers by longer created the platform? I think maybe that's where the confusion could be coming from. There's forex, there's crypto, some of these platforms, they have all of these things in one. Like you would have crypto trading, and then you would have also forex trading. Platform on your one.
Yes, I think that is where the confusion comes from.
Yeah.
Because a lot of people are able to differentiate total forex gain, crypto gain.
Yes.
Because whenever all they want is to trade.
Yes.
Yes, that is where. But there's a difference. And we have also what we call the CFDs. I don't know if you're aware of that. The contract for differences. So these things were developed. The idea comes from the stock market. Investors, they were only making money when the stock goes up. When it goes down, they don't make money. So that is where the contract for difference comes from.
Yes.
So contract for difference is I can actually trade Facebook stocks without actually owning part of Facebook.
Yes.
Because stock market is all about shares. You have
Yes.
to buy shares in a particular
Yes.
But
You become an owner.
Yes, you become part of the company
Yes.
that own. But with CFDs, I can actually trade the Facebook shares without actually owning them. When it goes down and when it goes down. When it goes up and down. So that is where the CFDs comes from. So different brokers, they offer different the asset classes. Telling you how you offer the CFDs, offer similarly to NASDAQ. You know what is familiar with but trade don't call the NASDAQ and his sisters. So NASDAQ, Dow Jones, the Standard & Poor's 500. So these are indexes.
Yes.
Yeah, they track particular stocks in the NASDAQ stock exchange. There are certain companies, for example, the NAS 100. These are top 100 companies. This index, it tracks the 100 companies in the Nasdaq Stock Exchange. The Dow Jones US 30 tracks 30 companies, top 30 companies, and then we have the S&P 500 tracks 500 companies. The more in the Nasdaq Stock Exchange.
Yes.
So these are indices. So, but this thing, that's why but tradable Nasdaq around 2:30 when the the Nasdaq Stock Exchange there's sort of volatility in the market on Nasdaq. So that is where people because they all want to trade, but they don't understand these indexes they affect the fundamentality liquidities are moving. They don't understand. So it's very important for these things but this affect to again move young liquidity
yes. Yes, and that's really what big investors are doing, across the globe. The hedge fund manager and all of that. They track all of these things, and how important is information when you are a trader. Information in terms of ke molato kana go nna le insider information I get go le trade motho a go information a itse gore kana ke nna ke yang go change go ma ba go bolelela gore ra go change kana kwa gore a get ke molato e leng gore wa go tshwarelwa but that still doesn't stop people not to go that route but to have information to know what is happening ka di assets e leng gore o trader mo tsona. How important is that?
As a trader, it's very important gore o nne le the information. But some information you can't have it, but you need to sort of to make your own research. The mistake what the traders make they don't really understand the assets by the trade. They are only thinking of technical because there are different analysis when it gets to the market.
Yes.
You have what called the fundamental analysis and the technical. So technical you're looking at the chart, you're looking at your candlesticks, you're looking at the patterns, you're looking at the wedges, indicators and everything. That is technical. But when it comes to fundamental, you study the economical data, you study the generic companies, the balance sheet and everything. So it's very important as a trader, what you are trading is affect to fundamentally the technical. Because what learn technicals, the fundamental they will affect your trades. Because our study said the fundamental and once I prepare
yes.
For example, every Friday of the first month, non-farm payroll NFP. So these are very big fundamentals. If you'll be affected and you will lose money. So during that data release, we are non-farm payroll. The market is moving. Like it's moving. So and it goes something like about 300 pips. So if when we are a technical trader and you did not prepare for this data, it means your trade will be affected. So if the trade goes against you, you're in trouble. Fundamental. So every time you need to know the fundamental, the technical part of it. Prepare I should be out of the trade. This thing should happen and then whenever gets a normal market.
The way I think you are just clarifying something which is very important. This thing is not really for everyone.
That's true.
Yeah, it's not for everyone because hona na hela o nela motho buka ya bo mora hore a go bala buka it will change your life. O taba bala page se pedi ba bela go khagala because you feel gore it's just too much. And the way ka helong go thalosa ka teng it takes me back to my days go banking, the things we used to learn, and some of the things were so sophisticated. It will take you time. You have to read, study, spend sleepless nights. So so that you can, because the idea is to be able to invest over a long period of time, and you will realize your gains over time. But everyone who wants to make a quick buck, they can't last. They can't last. You just heard my producer here. Mukila iteka a crash. So because he was probably looking at the short term, you have 1,000, you want to make 2,000, and the unfortunate thing that can happen to you, 2,000. No, it's most unfortunate.
And what's that? It's like I always tell people, you see, in the financial market, anyone can make money.
Yeah.
But the difference is the long-term game. In the long term, those who are skillful, knowledgeable, they will stay in the game.
Yeah.
Yes, because how small we ramad. Because can you just press buy and what's Kalawani, just press a buy, you make 3,000 from 500.
Yeah.
This thing is real.
Yeah.
Or Zalun put 100,000. That is how it's going to take everything from you.
I think that's why I go take a gamble. Because Kgothala lawa ya ko casino. How tsena abo tsenya di-coin tsa go gongwe e tabe go ja how so tsama mo go 30 pula hale abo you win 50 back, and then you are like now I'm making money, and then you think you figured it out, and then you start putting in more money. And another thing about emotions. Now your ego is being bruised. As you start to lose, you feel like the machine is beating you, but you feel like you figured out something. Keep on putting money, keep on losing. And then you are like, you start borrowing money. Now convince you put in more money until you lose it all. But at the end of the day, you were just using emotions. There was no logic to what you were doing. But investing generally, what you stated, like it's what has changed. Like we are more digital. Yes. But the principle is the same. It's a long-term game. You need to understand the fundamentals. You need to understand the technical. Information is very important. You need to study. Warren Buffett we 6 hours a day. But he's a billionaire, and he's been trading for over 60 years. Yes. And when I on trader, the moment they also know cash, when other traders are actually reading, trying to understand what a lot more focused. We I think this topic it's interesting, and I want us to have more of the conversations around this, so that we get Botswana to a point where they realize, look, we are on a shortcut, to becoming wealthy.
Actually, that is what I always tell people.
Yeah.
You see, the principles of success, they remain the same. I have a book, it's something like 400 paged. Prosperity Bible. I don't know if you know that book.
Yeah.
Yes. In the story, it's about 1800. But the principles, they don't change.
Or a Prosperity Bible.
Yeah, the Prosperity Bible.
Yeah.
Yes. So the principles don't change.
Yeah.
The same principles in the 1700 for successful people.
Yeah.
Still applied.
Yeah.
So there's no shortcut. Even in the financial market, it's a long-term game.
Yeah.
It's not something saying over 2 days and then the next week you are rich. Because people, they see their lifestyle on social media. Wow.
And then they feel
it's a long-term game. This thing is a long-term game.
Yeah. No, you're absolutely right. The principles remain the same. You read the book as the richest man in Babylon. You'll think they were written yesterday. You listen to Jim Roney, you think they wrote those books like last year or 2 years back. But all these books are old. Bo L. Nightingale. Before most of our generation was born, but you listen to their books, the audios about 1950. They were still saying the same thing. Nothing you have to do this and this and this.
But people don't read.
Yeah.
People think what they can take shortcut. And sometimes when people say, "Hey man, I want to learn how to trade," you give them a book. Next week is I didn't read.
Yeah. Yeah.
People don't want to read, they don't want to learn.
Yeah.
But even if you're experienced, you still need to learn,
Yeah.
you still need to read,
Yeah.
you still need to practice.
But the
That is how you
shortcut.
get better every day. There's no shortcut.
Yeah.
So even in trading, it's not a get-rich scheme. Make money today, next month, the third month, take everything that you have made. Yeah, that is how the market it is. Because we are
Otherwise, people are defrauding us. So, Mr. Kwapa, I wish we could further this conversation, but because of time, maybe so your last word, Hela, to a new trader or to a young person who wants to get into the game, or even someone who's old, just your last word, and then follow
so what I can tell people, trading is not a get-rich scheme. Trading is not something saying, don't worry, you just do it today, tomorrow you're rich. It's a long-term game.
Yeah.
You need skill. Saying, don't worry, it takes time to build, and you need to acquire knowledge along the time. You also need strategy.
Yes.
The most important thing is risk management.
Yes.
And psychology. Because this game, they say, is 90% psychology and 10% technical. So a lot of work is in you.
Yeah.
You need to do a lot of work to develop yourself.
Yes.
So it's more about your psychology and risk management.
Yes.
You have to protect your equity before you can think of the rewards. So that is what I can tell people. And while they want to get into game, I can recommend them some of the books, including this book by Roslater. Yes.
How to make money
Yeah.
on the stock exchange.
It's the book that I recommend. The other book that I recommend is a book by Mark Douglas, Trading Within the Zone and the Disciplined Trader. And the other two books is by Ralph Way, The Art of Trading and Top-Down Analysis. I think you can start from there.
Yeah. Good deal. All right. And with that bombshell, ladies and gentlemen, Mr. Kwapa, thank you so much.
Thank you very much for watching. If you want to engage with us or for collaboration, check us on our social media pages at Marshalling or Ignite Wealth, or kindly call us at 3950026, 3950026. See you on the next episode.
Hi, I have a free gift for you. If you want to claim this gift, go to www.marshalling.online/gift. In this gift, you will learn how to become financially free in 5 years or less.